Welcome, everyone, to this episode of the Expansive CEO podcast. I'm your host, Hannah Chapman, and we are finally back for Investment Friday. We had 2 weeks off because I was literally driving across the country from Cincinnati to Mesa, Arizona, Cincinnati, Ohio to Mesa, Arizona. So my family fully relocated. It was coming home for us, so it's all a very good thing. It's just really freaking hot because it's June in Phoenix, Arizona. So Brad Haines is here with me, Chief Investment Officer of Juncture Wealth Strategies. Brad, you're not in Phoenix this week, so
I'm not in Phoenix this week, although what I will say for our viewers and our listeners, I live 3 weeks somewhere else and I work for a week out of our Scottsdale office. So I do get to experience the heat. I did live in Arizona for 20 plus years. So this is a fairly recent event for my family and I. There's a lot of family reasons why we relocated. Um, but I still love Arizona. I'm still there all the time. And what's so aggravating to me is Arizona had a very nice June so
it
far.
did. Yeah,
It
the
was
first part of June was super mild.
super mild, really mild, until Brad Haines decides to go on his business trip in Arizona. And all of a sudden, the day I arrive, it's 110 degrees. The day I left, it was over 110 degrees. And so I was like, well, okay. I somehow brought the heat with me. And then I'll be back for a couple days in about a week or so, just for a real quick trip to meet with a couple clients. So I'm still there quite a bit.
Yes. And if you're watching on YouTube, you'll see if you've seen in the last couple of podcasts, I've still got boxes. I don't have my pretty background that I usually have. So just watch this space and I get to build out a whole new office and a whole new podcast studio. So many changes to come over the next few months. And that goes for the markets as well. I mean, again, we've been off for 2 weeks. We haven't talked about anything going on in the markets for the last 2 weeks. And some stuff has happened. So let's talk about that.
It feels like every day the world changes almost every day.
Yeah.
And almost by an hour to hour basis, depending on what day you're talking about. But you're right, a lot has changed, right? You have the stock market, the S&P 500, which is again the broad, large company index that people like to refer to and watch to kind of see the state of the equity market for for stocks. It's within really just a few percentage points from its all-time high.
Hmm.
Um, this during a point in time where excuse me, the backdrop is we have the tariffs, which are still not in effect,
Right.
right? We only have one trade deal done. That's with the United Kingdom, which, just to remind our listeners and our viewers, the United States had a trade surplus last year with the United Kingdom,
Meaning they
right?
bought more from us than we bought from them. That's the
Correct.
surplus part.
Correct. Correct. We exported more than we imported from the United Kingdom. Um, and so we only have one deal inked, really inked. Um, and in fact, that was talked about at if anybody saw President Trump standing with the Prime Minister of the United Kingdom last week. They held up the papers that they had inked the deal, and then some papers flew away because of wind, and so that was kind of a couple memes right there. But
Right.
the wind does what the wind does. But so that's the only one that's been inked. There's been a couple of preliminary frameworks that have been agreed to where now negotiations are actually getting down to brass tacks, which is China is probably the most famous one where we had one agreed upon when they were in Geneva a couple months ago. That didn't go quite as well. And so then they met again in London and they've agreed to quote unquote a framework. A framework is just a methodology on how to negotiate. The
Hmm.
actual negotiation hasn't taken place, and well, is now taking place once they've agreed to the framework. Again, we don't have trade deals with Japan, China, India, Vietnam, South Korea, any of our the European Union, none of our major trading partners do we have one done. So again, not to be dramatic about this, but the tariff effect is still in the offing. It's still coming. So we might see that temporary um, spike in goods inflation whenever the tariffs start to be implemented. Okay. Correspondingly, we'll also see our GDP drop a little bit due to that. Okay. It's a temporary effect. 12 months later, it will be a kind of a non-event. Okay.
And so what I'm still hearing you say is that I need to make sure that we buy our couch and our appliances
For sure.
before anything.
For sure. Like if you're going to do major appliances, cars, electronics, that's part of the reason the first and second quarter uh, are doing better than probably expected is because of these delays in the implementation of the tariffs.
Hmm.
People are trying to front run that and say, okay, well, I was going to redo my kitchen in 2026, 27, but maybe I push up buying the appliances now
Yep.
so I can get all of those electronics, those appliances in now before the tariffs. I know in my own family, I had a sister who bought a car earlier than she wanted to because of the tariffs. So she went out, she bought a car. Great, she saved a little bit of money. So again, part of that is that consumer spending, which is stronger, has been pretty strong, is probably somewhat front running or trying to get ahead of those tariffs. Um, that said, again, no one should panic. No one should panic at all. Our inflation rate right now is really reasonable. And so even a spike of inflation of a half to 1%, which is what the analysts have been expecting, shouldn't be a big deal, shouldn't increase interest rates, shouldn't be a big deal, particularly because it's a very temporary effect.
Hmm.
Now, um, transitioning into that, how's that going to translate to interest rates,
Right.
right? Well, this week, you had President Trump, who is pillaring the Federal Reserve Chairman Jerome Powell. He's kind of putting him in a pillory because he's saying, "Hey, he's too late. He should be lowering interest rates dramatically." Okay. And Jerome Powell is kind of sticking to his guns. He's saying, look, the Federal Open Market Committee, which is the committee that votes to raise interest rates, lower interest rates, keep them the same, okay, is made up of a lot of people. Jerome Powell is only one of those. He's the head of that committee, but he's only one member of that committee.
Right.
So he says he's basically sticking to his guns and saying, hey, the Federal Open Market Committee are going to rely on its analysis to meet our mandate, which is full employment and stable prices. So he is not bending to the will of President Trump. A lot of presidents have commented in the past on interest rate policy, what they think should be done, but it's really critical that the Federal Reserve is independent of the federal government. And this is why, because a president will always do something that is popular among the populace or the citizenry, but may actually harm uh, the country overall economically
Hmm.
in the long term. And so President Trump said basically, well, the reason why I want him to lower interest rate is because I have these deficits I want to spend, and it's going to cost us a lot of interest. Well, he's right. However, one of the things that's also causing some issues is yields have gone up over the last couple of weeks.
Right.
So two things that most individual investors and households don't realize is twofold. Is one, as equities have gone back up, longer term bonds have not. They have fallen in price, again, their yields have risen. So now we have a very, very steep yield curve, meaning the yields being offered in the long term, 20 years in maturity, are far higher than the yields in a 2 year that you can get in a 2 year CD or a 2 year bill or excuse me, U.S. Treasury note. So the difference between those is that steepness in the yield curve. Okay. It's normal to do that, but not when the U.S. equity market is going, our GDP is slowing down. It's usually not like that, particularly as inflation has decelerated, yields have gone up. That is very contrary because normally it's the other way around.
Mm.
Normally, as CPI comes down, yields come down. Okay. Well, now it's down. Now those yields are up. And the US dollar relative to a basket of foreign currencies is down about 10% since
Yeah.
inauguration.
Yeah.
Okay. And there's a lot of speculation as to why. Normally, during periods of geopolitical turmoil, the US dollar increases. It's usually sought after as a safe haven, right? It's the
Hmm.
US dollar, it's very safe, it's backed by the US government and that. But I think a couple things. One, slowing economic growth in the US over the next few years is projected. Two, also, other countries are projected to catch up in their economic growth. So Europe in particular,
Okay.
Japan and Europe in particular are expected to pick back up in terms of economic growth. And so, again, we have yet to see that, but over the past couple of years, Europe has always kind of been the sick man in the financial markets because they can never kind of break out of this zero or very low economic growth. So, um, that's where a lot of economic forecasters are saying, hey, put some money internationally, diversify away from the US dollar a little bit. Um, and hopefully that'll turn out. Um, Part of that is also everybody I'm sure has been hearing about Israel bombing or taking care of Iran. So, by way of background, Iran has been to an agitator to Israel for a very, very, very long time, for
Mm.
decades. They have funded Hezbollah, which is a terrorist organization located in Lebanon and Syria. They have funded Hamas, which obviously was part of Gaza, actually ran Gaza for a number of years. They also fund and support the Houthis, which again have been launching missiles into the Red Sea and at Israel directly. Um, so push came to shove. Israel said, "Hey, we can't allow them to have a nuclear weapon. They've chanted death to Israel, death to America far too often to have a nuclear weapon. We think that they're pretty close to developing one." Um, Iran, in discussions with the U.S., had had said we're not interested in negotiating any further. They had walked away from negotiations with the Trump administration.
Well, he took away, I mean, I don't know all the details of this, admittedly, but I mean, we had a nuclear deal with Iran,
Mhm.
and my understanding is that Trump got rid of that,
We backed out of it. It was
backed out of it.
negotiated by, I believe, the Obama administration,
Hmm.
and it allowed them to develop nuclear for domestic consumption.
Right, for power
Right.
generation, right?
Yes. Problem is, and this is what a lot of people haven't seen, is um, if you're going to develop nuclear technology um, for nuclear power, you only need to refine uranium to 5%. Okay. If you need to do it for a nuclear weapon, you're going to refine it to 60%.
Mm,
So it's a much greater, much finer, much more refined product for a weapon. Um, well, when Iran made built all of their refining capabilities far underground, why would you do that? If you're really truly doing it for domestic consumption of energy, why would you build your uranium refining factories under 100 feet of concrete? You wouldn't.
right.
So
Yeah.
so that's where I think it was uh one, I think Netanyahu has always had this on his agenda.
Hmm.
Oh, it's always been a goal of his. The Netanyahu, which a lot of Americans don't realize, he came from the IDF, the Israeli Defense Forces. He was a military guy. He sees things very, very hawkish that way. Um, and in fact, his brother was one of the commandos involved in the Uganda rescue operation, which if anybody
Mm.
wants to go down a rabbit hole on YouTube, please look that up. Israeli evacuation in Uganda, and you'll see how much risk the IDF will do for their citizens. Um, anyways, so one, he had it on his agenda, his goal list. Two, um, Iran had developed quite a bit of nuclear technology, like quite a bit. And as we've seen through the bombings, they had developed a number of different locations where they
Mm.
were developing parts of this. They were developing ballistic missiles that went further than they had in the past. So they were looking at not ICBMs, but pretty close. So delivery packages, basically, or delivery units. And so when Iran walked away from negotiations with the Trump administration, um, that's when I think Israel said, "Hey, we're going to take care of this problem because it's existential for us. We're only a small nation of 10 million people. We can't take too much bombardment by particularly heavy conventional, but also nuclear weapons. So we're going to take care of this problem now." Israel has done this in the past. Iraq in 1981, they went in and destroyed their nuclear facility that Iraq was developing. Um, but Iran, because of funding these terrorist groups that have constantly attacked Israel over many decades, um, them walking away from negotiations, them having a prime minister that has it as his goal to make that a safe environment for his country. Um, I think they had to go. I think they just did it. Now, what was interesting is the United States is not part of this operation. The only thing we're doing is helping protect Israel by shooting down missiles or drones that come across
Mm.
Jordan or Syria or Iraq. We're helping shoot down. The UK, I believe France, Jordan are all have military assets in the area doing that. Okay, so um, but Israel's doing it on their own. And so far, they're doing what I can see is they're doing a really effective job. Now, what has this done to the financial markets? One, it increases the uncertainty dramatically in the geopolitical sphere. A
Right.
lot of people don't realize how tightly Iran, and Russia, China, and North Korea are tied together.
Hmm.
They're very, very tied together. In fact, China has started shipping um, supplies into Iran. They've started sending big airplanes with stuff in them. We don't know what's in them, but they're sending them from China directly to Iran. Similarly, Russia is one of Iran's biggest allies. Iran has helped fund a lot of the air attacks on Ukraine on Russia's side. So all of this is tied together, and all of this does have the risk of growing into a larger geopolitical crisis, which has pushed the oil price up, which means oil stocks have started to go up, and Commodity prices have started to go up, gold and silver going up. Stock prices inexplicably have gone to almost their highs, which, if you have a lot of this time kind of risk and your equities are pretty close to their high, maybe time to scale some back just a
Mm,
little bit. If you're kind of over your skis in terms of, hey, we've come back from this 20% decline earlier in the year. I'm almost back up to 100%. What do I do? If you have too much exposure to equities, given your life, given your goals, given your risk tolerance, it's a great time to start dialing some back a little bit, rebalance out of equities just a little bit, add to some bonds, which again, bonds are paying you higher yield now.
yeah.
Equities are kind of over their skis a little bit. Maybe a good time to do a little rebalancing in that way.
One of the things that was coming up for me as you were kind of explaining the geopolitical chess game, which is for me, I'll just, like say my heart, I really wish that this was not a thing. I wish we could grow past the need for so much conflict in the world. And I will put that there. So in my heart, I am a pacifist, for sure, if that wasn't abundantly clear um, already. But there's also like it's very interesting to see the dynamics that are going on and like under starting to understand why even the Trump administration is like conflicted around what they're going to do because we've had such strong ties with Israel for so many decades. Um, and they, are part of our politics in a lot of ways. And so we are, have had full-throated support for Israel for a really long time. But then at the same time, anyone with eyes to see it knows that Trump has very deep ties to Russia and to Vladimir Putin. And so the fact that Russia and Israel are on the opposite sides in this particular conflict, like that really does put Trump in particular like in like a weird triangle of like I'm supposed to like the US has always supported Israel. I've been really cozy with Putin and expressed, appreciation for Kim, the North Korean dictators, like all of that. Like it's a very interesting, like, okay, what are we going to do here?
Yeah, it's a weird dynamic. I agree with you completely because, in fact, the Russian Foreign Ministry earlier this week came out and said, hey, we just want to warn the US government not to get involved in bombing Iran because we are the only country in the world, I believe, that has that massive ordnance penetrator bomb, which is designed to take out subterranean bunkers. It's called the bunker buster, right? It legitimately is designed to penetrate the earth far into the earth and then explode.
Yeah.
Okay. And then it usually, you know, any bunker that was there is no longer there. And if it's further down, you can drop another couple on top and you keep going down until you destroy the bunker. Um, to my knowledge, I think we're the only country in the world that has it.
Mm,
And there's only one plane that can fly with it as of right now, and that's the B-2 bomber, which the United States is the only country that owns those. So I think Netanyahu is probably putting a lot of pressure on Trump, saying, "Hey, we have an opportunity to kind of take out um, the terrorists that control Iran's government right now. It will simplify the Middle East dramatically, which it might not. We
right.
don't know.
That's been the story over the last, 50, 60, 70 years, right? Is that we're going to take out this particular terrorist group, we're going to support this one against this one, and then it's going to be better. And that over and over has proven to not work.
Yeah,
As far as different groups taking power, different groups coming. also being very angry at the United States for having meddled, right? Like, I mean, that's been our history in the Middle East for
Yeah,
a
I
long
think
time.
we've stepped all over ourselves in the Middle East a lot. I do think we're a little bit different in Iran than it was in Afghanistan
Hmm.
and in Iraq. Okay. And the reason I would say that is it's seemingly the populace of Iran are not pro the Islamic regime. They're
Right. Yeah,
actually,
that's what you were saying
they're,
before, that the theocratic government is very at odds with a large majority of the population
yes.
itself.
And yes, and you have the crown prince in exile who has already announced he's come out and said, "Hey, Iranian citizens, you need to take to the streets. This is your chance to get rid of the regime.
Mm,
You're teaming up with Israel. Okay, Israel is doing a lot of the heavy lifting for us, but it gives us the opportunity to do regime change for us." He's already told Israel, he's already told the US, he's already told that he will come in and he will do an interim government in Iran for a short period of time until they can have elections. Really good, internationally monitored elections, which then the Iranian people can vote for whoever they want to run the country. And, if he does have popular support, and that's a big if he does, then it's a pretty easy that would be a pretty easy transition to say, okay, this guy has a lot of popular support in Iran. He could come in and run it. And so the Ayatollahs have kind of crossed too many red lines. Now we have an opportunity to take out the whole regime. So we may or may not do it. I don't know. Again, I'm not a Middle East analyst. I'm not. But what I can say is it dramatically increases the risk in the financial markets and in the global economy overall.
hmm.
So, if you at this standpoint, do I think the US will get pulled into a bigger war? I really don't. I really don't. I think Trump in particular is in a tough situation because he likes Vladimir Putin. He's trying to get Vladimir Putin to the negotiating table. Mr. Putin has been extremely uh, off-putting when it comes to doing that. He does not want to get negotiated. He wants to crush Ukraine. He wants to take over the whole thing. So he has no incentive or no desire to negotiate. Um, well, Iran has been a major supporter of that war.
Hmm.
So if Iran gets taken out, then a lot of the supply of the drones, the killer drones that go into Ukraine on a nightly basis, that supply gets shut off a little bit. So that's kind of a good thing, right? It may get Putin to the negotiating table sooner, but what does it do to China? Does China step into that void? Does it start to fill because they've got a innumerable army and navy and they've got pretty good technology and stuff. They just have never fought a war. They haven't fought a war for many, many years. And the last one they did, they got crushed by the Japanese. So, you know, I'm not saying it, again, I don't think the US will go to a long, drawn out war. I don't think that's going to be the case. I think the UN will probably be involved, but I don't think the US may help um, do a couple strikes to um, destroy the nuclear facilities, um, possibly take out the Ayatollah. But we'll see.
Well, and when we're talking about uncertainty, when we're talking about the financial markets, and what all of this, bringing it back to what does that do to, the stability here at home for people who are saving and or retiring and all of those things. Um, there's two things going, crossing my mind at this moment. And one is that black swan events can and do happen, and we can't predict them or know exactly, what they're going to be at any given time. Right. I mean, the terrorist attacks in 2001 on 9/11 were a black swan event. COVID was a black swan event, right? We like by nature, we don't have enough foresight to know that that's coming. You can look back and be like, well, there were signs here and there, and the financial markets don't know what's coming. So, regardless of what other clues might come up later, we really can't predict those black swan events. Um, Hopefully, that's not the case. And in some other instances, even COVID, we actually bounced back really fast from that. It really did act as a black swan, and we ended the year in 2020 up overall in the financial markets. So the guidance, and I mean, this is literally, what I tell my clients and what we try to help guide our clients through at Juncture in general is that, like we wait through events like that. We don't know, but if it's anything like what we've experienced before, there is the great possibility that it could come back. And as long as you don't sell at the bottom, it's going to be okay.
Yeah, it's interesting because I've had a couple conversations with clients over the past couple of months that we've talked a lot about that. The last two quote unquote bear markets we've had um, have been very V-shaped in recovery, right? Down
Right.
fast, up fast. Um, and that's an unusual shape or an unusual outcome for a bear market.
Mm-hmm.
And typically bear markets take a year or two. And I don't forecast any right now, but I just want everybody to understand that, when we go into a bear market, it could be a multi-year period where your stocks are down. And that's an outcome that we're fully aware of. It's an outcome that we're prepared for. It's an outcome that we fully expect to happen at some point in time. But there's a lot of people in the financial markets, particularly the equity markets, that have started investing since 2020 that have never experienced a longer term bear market. They've
Yeah.
experienced two very short V-shaped recoveries, which is very unusual in the financial markets.
Yeah. Over the decades,
Yes,
right? When
yes,
we
over the
when
longer term.
when
Mhm.
we've talked about the different types of recessions, that's a few months back, we talked about the different types of recessions that um, typically happen. And that's a really, really good point, as well, to know that, like, well, gosh, maybe that was 6 weeks ago, maybe 8 weeks ago. We also talked about the different averages of, like, this is how often a true bear market happens. This is how often a correction or 10% drop in the market happens, right? These things happen pretty regularly. So if your strategy is based on, well, the S&P 500 made 20% last year and 24% the year before, so it's just going to keep making 20 to 24%, right? No, 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 no. That's not how averages work. And the average, right? The average is like 8 to 10% over the long term. So if we've had a couple of good years, that's awesome. Um, do something with those profits, right? Like that's where we do the rebalancing. That's where we reallocate and make sure things are positioned properly. So you're not so top heavy on the things that have grown. But do know that those long-term averages are there for a reason. And it's because we don't typically see 18, 20, 24% growth year over year over year over year over year.
Yeah, it's good for us for having it for the past couple of years, but it's one of the reasons that a lot of forecasters are saying, well, international assets in small cap are probably going to outperform over the next 5 years. That's not to say in 2025, that's just to say on average over the next 5 years, those assets haven't performed nearly as well as US large cap. So their expectation is that eventually that they'll catch up. Um, we'll see.
Well, it's been again a crazy couple of weeks. I think we'll leave it there for today and put my heart back out there and just say I hope for the easiest, swiftest, least destructive outcome for everyone in all the things that are happening right now. I mean, this it's a lot. It's a lot right now. And that energy feels very just heavy of the possibilities of what could happen. So if we, yeah, just hold that possibility of the least destructive from what we've already experienced. We've experienced so much, I think, in the last couple of years in that regard, and resolution would be beautiful.
That would be fantastic.
So beyond that, with the financial markets, if you have, as you know, with any questions, any thoughts, any topics that you've been wondering about, or another one that you mentioned today, Brad, is the U.S. dollar versus other foreign currencies. I think that would be a really interesting one to talk about. I have several clients who either are going abroad or have been abroad, and for more than, like a good chunk of time, 6 months, a year, that kind of thing. So those topics are relevant as well. If you are listening and you're thinking about anything like that, send us a note, send us an email, DM on any of the, Facebook, LinkedIn, Instagram, wherever. And we'd love to answer it and talk more about things. Anything else from you, Brad?
That's it. That's all I got.
All right. We'll see you next week.
Thanks.
That's it for this episode. Thanks for listening, and be sure to like and subscribe. And again, if anything resonated with you from this episode, I would love to hear from you. Email me at Hannah, HANNAH, at expansiveceo.com and tell me about it. And if you're ready for your greatest expansion, you can find ways to work with me at expansiveceo.com and at x2wealthplanning.com. That's X, the numeral 2, wealthplanning.com. So until next time, remember that there is enough, you are enough, and your birthright in this lifetime is to be expansive.